Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Saturday, February 24th, although it won't get posted probably to Sunday the 25th. My email address is hgsidoc@gmail.com. If you're new to my channel, hit subscribe, hit the alarm. You'll get notified when I post these. If you like this, that's great. Give a thumbs up. If you have concerns, things you like, things you don't like, I'll respond to an email or to a remark on YouTube. Let's get going. Well, we know what this week was about. It was about NVDA earnings, and the question is, will they be enough to feed the bull? If you watch SMCI, which we'll look at in a few minutes, you'll see it rallied on earnings, but really couldn't hold after the NVIDIA earnings. And so will the rest of the market be like SMCI, or will NVDA drive everything ultimately higher? This is for educational purposes only. Anything I say should be taken in the spirit of education and not investment advice. I'm a doctor, not a broker. I'm not affiliated with any software vendor or trading companies. I have paid for the tools that I use, and trading involves risk. You are solely responsible for any investment decisions you make. As always, I welcome you to join me at stocksanddocs.com. I'll post something most days of the week. And if you fill out the little form, I don't get that information. That goes to becomeabettertrader.com, who puts the site out for me, but it'll get you notice when I post them, usually before the market opens. If we look at the major markets on the week that was, it was a 4-day week, but we're looking back 5 days. On the major markets, small cap growth took a hit. You can see the IBD 50 was down 2.2, ARC Innovation was down 6.3, and the Russell was down 2.2. They had been leading the last couple of weeks, so perhaps some profit taking there, perhaps something more sinister. The rest of the major indices were up, although modestly, led by Spiders 1.2 on the week and the NYSE up 1%. Notice on Friday the NASDAQ Composite and Qs were down. The Russell was up a bit. We can see over the last 5 days the only sectors that were down were real estate and communication. On Friday you had discretionary, technology, and energy down as well. If we look at the Q Edge tool, you can see that 62% of the stocks in the S&P 1500 are sitting above their midline. That's bullish, but not excessive. You could see on Friday half the sectors were up, 63% of the industries and 61% of the stocks. Again, bullish in direction, but not overtly so. If you look down here, whoops, I'm sorry. You can see going back a month, 10 days, the market was stronger. It weakened a little bit over the last 5, and I think a lot of that had to be going into NVIDIA earnings. We'll look closer at that. And of course, we all know what happened. The market got strong after the NVIDIA earnings. Now, this is from the Q Market Breadth tool, and this one has some concerns. Now, this is looking at a composite of the NASDAQ plus the NYSE. And what I'm circling here with my mouse are the Hindenburg-Omen signals. We are still seeing Hindenburg-Omen signals, and if you look at stocks above their 200 in white, above their 50 in yellow, you can see that they've come off their highs while we've gotten higher highs on the index, and that's a divergence, and that's part of the concerns that people have for the short term. I broke out here for you the NASDAQ and the NYSE. And a couple of points. You've got Bangos and Hindenburgs all over the place on the NASDAQ. That just tells me we are stretched, we're due a pause. It doesn't mean a big sell-off, but I'd be looking for at least a pause to refresh. When you look at the NYSE, the more classic thing to look for at Hindenburg-Omens, you've got confirmed Hindis and lots of Bangos, which again are sort of the opposite of the baby out with the bathwater. This is the one where we're just buying everything because the market's on fire. If we look at the Nick Drendel tool for Friday, you could see not big moves on the session across the board. The leader on the week, cannabis, China, semiconductors, biotech had another good week, up 1.6. And if you look out 50 days, the leaders have been semiconductors and biotech, internet, and crypto. Crypto's been a very big mover of late. Now we'll go more into detail this in a bit, but this is my weekly market timing model. It can be constructed on TradeStation, TradingView, and very easily on wealth charts, which is where it's constructed here. and HGSI as well. And what you can see is prices above the moving average, and the bond goes green on the weekly charts on the Spider, the Qs, the Diamonds, and the Russell. Spoiler alert, the daily is less impressive, but the weekly, which is the main driver of my direction, still says I should be long. Rates ease just a teeny bit. You could see 35 cents on the 10-year, 68 cents on the 30-year, 1.5% down on the 30, 0.8%. So a little bit of an ease, still above 4% on both as the markets continue to ramp higher. I just always like to look at this because there's information here. The 10-2 and the 10-3 yield curve, when do they uninvert? They uninvert when the Fed starts cutting on the short side or the market starts raising on the long side. We are close to uninverting on the 10-2. And traditionally, if you're going to get a recession, and notice every time we uninverted or normalized, we got a gray bar, which is a recession. We're close on the 10-2, not on the 10-3. This is a measurement of credit tightness. Typically, in recessions, credit gets tighter. Nothing going on here to be concerning. And then here, the Philadelphia Diffusion Index. You don't get a recession starting when you're above zero, and we're above zero. In fact, you don't usually get it when you're above minus 20. So is there one in our near future? I don't know how we get one this year. I mean, obviously, if the market starts to slow down faster than the Fed starts to cut, you might get something. But considering that, assuming we get through and get a budget over the next week or two, which we know will happen, it always does, even if they delay it a day or two, we're going to see fiscal spending in 2024 because it's an election year. You got a president, all the House, and a lot of the Senate, plus a lot of the state seats. And that some of that infrastructure money and semiconductor money will be spent this year. And of course, we've been forgiving loans and things, so people will have more cash to spend. Breadth, if you look at stocks above the 200, stocks above the 40, maybe a little bit less this past week, which would be good because we were getting a little bit overbought. But the 21, the 13-week new high, new low actually turned higher, but it's not in a signal. So breadth, we know breadth has been bad, but probably has improved. If you look at the AD lines, and I love this chart because I've got the NYSE, lock, stock, and barrel, the blue being the index, the yellow being the AD line. The NASDAQ 100 overlapping. The high cap Russell 1000 overlapping. The Russell 2000, there was a little bit of a divergence, but it's closing. But look at the big delta, and that would be in the NASDAQ overall. So the NASDAQ composite is where the biggest element of that breadth divergent lies. The buckets, again, most of the stocks, 2/3 are above the midline of their Bollinger Bands, and nobody is so high below or above that you would expect that we have a reversal or a signal anywhere close. We've had a bunch of Hindenburg-Omen signals, and you'll notice that we don't have any new lows on the NYSE, but look at how high the new highs are. 11.92 on Friday, 13 on the 22nd, it was 14 on the 15th. When the number gets that big, the markets have a tendency to go sideways or pull back. That market's extended. You could see over here on the NASDAQ, we've got some increasing new highs.Maybe that's more of a concern. This week, most of the ERG levels, remember ERG takes every stock, and I look at only above $2 and 250,000, which would be the universe that I might buy. And if you break up into buckets of 10 on the ERG, or in this case 30 because it's up to 300, ERG is EPS rank plus relative strength rank plus group rank. If you're a growth stock investor like I am, you want to see a lower left and upper right curve. You're seeing the opposite. This was not a great week for growth, and you notice that most of the scores were below zero, or meaning negative. You could see here the worst performance were at stocks that had high EPS rank. Yet low relative strength rank underperformed here. So I don't see much of a signal here except to say it wasn't a great week in the market. This week will be interesting. We've got some GDP revisions and we've got some wholesale inventories on Wednesday. The red lines on this side are all Fed speakers. And we've got jobless claims and then we got the whole PCE complex on Thursday. On Friday, we got some PMI, manufacturing sentiment, some spending. There is a lot of news, especially the PCE, which we know the Fed likes as an important gauge of the economy. And you got a lot of Fed heads to talk the market up or down. And I think as long as the market doesn't have an overt sell-off, I don't think the Fed's going to be in any hurry to cut, but that's just my opinion. Still a lot of earnings you can see on the right, and it's a judgment call to hold stocks over earnings dates, and it's bad judgment to not know when your stock's earnings date is scheduled. In case you were sleeping last week and weren't paying attention, you wouldn't be listening to this if that was you anyways. If you beat your earnings and you maintain or grow your outside forward-looking numbers, you got a big gain. But if you missed your earnings, if you missed your revenue, or if you missed or reduced your forward guidance, you got clobbered. So let's watch closely what happens this week. And as I have said for years, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So S&P and the Dow move into record territory this week. Oh, come on. And the NASDAQ riding NVDA shifted back into rally mode. Big earnings beat, or big revenue beat rather, in NVIDIA, 8.5% on the week gain, leading the Vanguard Mega Cap Growth Index to plus 1.6. The market seems to have digested the delay in rate cuts, and several Fed speakers have come out saying that they expect cuts this year. And I think that the timing of those cuts will be interesting and could impact on the markets. This week we have more inflation data and many Fed speakers. I follow my models. My weekly model says to be long. My daily model, which I use for fine tuning, says be careful. Thus I remain long but not all in. I'll be selective in my buying, but although I am still concerned about a near-term correction, considering we are in the fourth year of a presidential cycle, rates are going to come down and inflation likely is improving, and we'll see fiscal spending this year, I think any pullback or correction we get here is going to be short-lived and we end higher than we are now. Again, please join me at stocksanddocs.com during the week for some short 5 minutes to 10-minute updates. So here again is that weekly timing model, and what I wanted to go back and look at here is we had a number of waves down. This was the peak of the markets that occurred at the end of 21 going into 22, and this is a weekly chart. We bottomed, interestingly, not in November. We bottomed in October here on the S&P. But if you look at the closing bottom, it even goes back into September. And look at the run that we've had off the market since that time. We closed on that September 26th weekly close at 357.18. We're at almost 508. That's a huge move. And you could see that for the most part, my model would have kept me in the market and got me back in here. So we would have missed some of the chop. So the S&P all-time highs looks great. Qs, all-time highs, maybe a little bit of hesitation, consolidation up at the top. That's okay. Bond goes green. The Russell, I think, is fascinating because here we are going back to 21. The entire year of 2021, we were in a Darvis box. We had a fake breakout, and that failed breakout should have been the signal that the market was going to roll over. I also think in 22 from, actually 23, rather, here, let's get the dates right, from December of 23, actually this is 22, I don't know why it's saying 23 up above, but what you could see, oh, because I'm looking at the wrong place, my bad. It also looks like from April 2022 until now, we've been in a Darvis box in 23 and 24 as well. We did break out. We came back in, but we're still above the line. So we'll be watching that. And here's the diamonds, all-time highs. This is the 2020 crash. What can you say about this market? It's still super, super strong. Now, as I mentioned, the dailies were not as strong, and you notice the bongo is red, prices above the median average, so the Qs are in a hold. And on the Russell, it's above, prices above the moving average, bond goes red. So I've got buys on the Spider daily, Diamond daily. I got holds on the Russell and the Qs. I've got buys on the monthly, weekly rather. So to me, I'm still long the market. If I look at the indices on the daily, remember it was a holiday. So here was where we ended the prior week. And let's see. All right, let's just make a line here. Do a drawing line, horizontal line, and let's put it right here. And let's make that line dot dash, or small dots this week. Let's make that line maybe a little yellow. And that line is the prior week close. And you can't see it, so let's try that again. Let's go back. Oh, because I made it black. Don't want to make it black. There you go. All right. So you could see we gapped down on Tuesday, traded lower Tuesday. On Wednesday, interestingly, did somebody know something late in the session, or were they just betting that NVIDIA wouldn't let us down? And then what happened? On Thursday, after the NVIDIA after-hours earnings, we had a major gap up, and we really traded higher into the close on Friday. The peak was up here, which was early on Friday morning. So some profit taking probably before the weekend. So here's where the prior week ended. So a very positive week, despite the nonsense early related to the concerns about the NVIDIA earnings. If we look at the major indices, so white line, which means we've got some divergence setting up on the S&P 500, but it has not been confirmed. Price is at an all-time high. And it was up a teeny bit, 0.07 on Friday. We have divergence. It's not confirmed on the Qs, and we were down 0.29 on the Qs. On Friday, the diamonds were up 0.19. Again, divergence not confirmed. And the only of the major four that is not showing divergence right now is, interestingly, the Russell, which is above this white line, which was the high back here in July of 2022. And this is the Darvas box, and I'm hoping we stay above that. If we look at the volatility, let's look at the VIX weekly. And you can see the VIX was all over the place, but finished down on the week 3.44%. Dollar going sideways, and if you're long this market, you'd like to see the dollar stay below this 200. If we look at commodities, a lot of people calling for a big move in gold. Hasn't happened yet, although we did take out the 50, up 0.5%. Silver up 0.82. Oil, after a multi-day run, actually gave up some. And natural gas, as I like to say, is still dead to me. The 10-year is struggling above this line. Why does that line matter? Because look at what in the past. Resistance and resistance. And we sure as heck don't want to see this turn into support. So we'll be watching the 10-year closely. If we look at the S&P 500 sectors on an hourly basis, we can see, and this is what I like to look at to get a sense of what's working now. I'm looking for two things. The biggest strength in the market is going to be pointing up here, and you can see the spiders doing that nicely. The second thing I'm looking for is the last bar. So I know industrials end of the week strong because of that green bar. So materials are improving. Communications has weakened. Energy maybe, still low in the group. Financials kind of intermediate. I like this industrials. Technology weakened. Staples, real estate, utilities, all moved early in the week because of concerns about the market as defensive, but really didn't end the week strong. And I still like biotech, which looks like it wants to come out and threaten recent highs, and XLV holding up as well. So just looking at this, if I had to pick where I'd like to be searching, I think industrials are interesting, financials are interesting, energy is okay, and then on the healthcare, especially biotech. Now, I don't really have to know where to look because I'm going to go into the scanners and let the program do it for me. Heat map shows me after the market of the S&P on Friday. Now, Friday's usually safe to look at this because you don't get a whole lot of, what's the word I'm thinking about? After hours action on Friday impacting. And you could see that NVIDIA was relatively flat on the session. It was much higher earlier in the day. Lots of weakness in big cap tech, but a relatively flat day on the S&P. We're going to come back to this stock, which is one of my favorites in the market right now. Let's take a look at Wealth Scanner and let's see what's working and what's not working. So, first thing to notice, I now got 4 stocks at 800 or above. Last week we had 1 or 4 ETFs. These are ETFs of themes, sectors, industry groups, markets, just something to tell me to look. So energy MLPs, new highs, and we've talked about this a little bit, and I keep mentioning that the one that I've owned, and I've owned it for a while, and I don't actively trade this because, well, one, you can see it's had a nice run up for quite some time, but also it pays an 8% dividend. So MLPA and MLPX, 2 of the MLPs, ETFs are up at the top. That should tell you a little bit about MLPs. PPH, pharma, we'll look at some of that. Here's oil production. So pharma and oil production and the MLPs are up at the top. Malaysia, Japan, that's interesting. Spider value, Russell value. We said that growth was a little weaker. Amex Finance, there's your financials. Infrastructure, that probably plays into industrials. Semiconductors further down, there's your healthcare, there's your industrials. So a lot of things are up here. That's actually pretty broad-based. Now, how do you actually take the 11, 12, 13, 15,000, whatever the number of stocks are in a database, and try and find what you want to play? That to me is the power of a scanner. Now, I have a specific pattern that I want to buy or I want to look for, and it's a pullback in an uptrend. So let's go into the CAT scanner and let's go into healthcare to start, because that was one of the places that was on the list. And I have one for drugs and biotech, but let's look broader at the whole healthcare sector. And then let's look and see who's got 4 stars. And let's look at COLL, which really is almost a textbook of what kind of stock I want to buy. I want to buy a stock that's in an uptrend. Is this in an uptrend? To the right is a weekly, to the left is a daily. There is no question it's in an uptrend. Now let me go in here and switch around the wealth signal. Oops, not the wealth signal, Jeffrey. I want to switch around the EMS. I want to make this triangles, not dots, so I don't duplicate things. And there's no right or wrong. You just make it what you want so you know what it is. And what you could see here is we have an uptrend, then I want a pullback. So I can scan for pullbacks. How do I know I can scan for a pullback? Because this is it's interesting, it's only giving me the 1 time frame, but this is a daily bongo. This is a weekly bongo. And what I'm asking for is I'm asking to have the stock within the last 9 bars go from red to green on the daily, new uptrend, and the weekly to have stayed green. So here's a stock, pullback in a squeeze, and then on Friday it had big volume, actually a couple days in a row. I like that. A gap, volume, breakout momentum coming out of the squeeze. Relative strength and OVV are very strong, and it's less than 95. So COLL is sort of the perfect pattern for my kind of trading. And after big moves, and this was a pretty big move, 10%, it would not be wrong to expect it to do this for a couple of days and then go higher. So I will be watching it, and nothing will make me happier than if it has a low volume pullback here and then breaks above a flag. So I'll be watching Collegium. MRVI, similar pattern, but I don't like it as much. It may do just fine. Why don't I like it as much? Because it's not been in an uptrend. Yes, short term, it reverted to daily and weekly uptrends. Short term, it had a gap on big volume, breakout momentum, relative strength and OBV look good. And I'm going to ignore the 100% on the extended because it's sitting right at the 200. You can't be extended in my book and being on the 200. I ignore that. But it's below the 200. And my expectation, and I'll just draw my expectation in here and we'll see what happens because we'll probably look at it again this week, is that this thing's going to run up to the 200 and it's going to drop down. And the question will be, does it drop down and go right back higher, or does it come back into here? And I don't know that enough, so I'm going to wait and see. So interesting pattern. What do we got here? Lowers to 10. Well, that doesn't make me feel good. And this one raises to 14. So I'll watch and see. It's not what I'm going to play. Select medical holdings. Yes, I like this a lot. Why? Are we in an uptrend? Kind of, sort of. It depends what time frame. But that weekly bongo here is green, so I'm going to give it a yes. The daily bongo just did that reversal that I look for. I've got 4 dots. I've got a gap, volume, breakout, and momentum coming out of a squeeze. Relative strength and OBV look good, and we're not extended. So I like Select Medical. This is one that shocked me because this thing had died, but it's back. And if you've been to some of my early Wealth 365 programs or my Orange County seminars, this is one of my favorite stories. This is a stock that I called out at a Orange County meeting when it was $4 or $5 and ran to 150 within a year. This thing has fallen hard. This is interesting. It's got massive volume. It's got volume breakout momentum coming out of a squeeze. It just flipped to long on the daily bongo. It's long on the weekly bongo. It's not extended. Relative strength and OBV look interesting. So there you go. I've already found COLL, SEM, and Tandem. Let's keep going. VIR. Let's look at VIR. I don't like it because it's so far below the 200. I'd rather buy things above the 200, but from a pattern-wise, the weekly's green, the daily had a recent pullback, and now you got a big volume move. It's worth watching. Henry Schein. Distributors are very good in tough economic times. Here's one that's been selling off, but look at this. It's been in an uptrend now going back 3 months. It's got great volume, moved up. There's a squeeze in when these moving averages are together. Relative strength and OBV. I ignore the high jump because we're coming right out of a squeeze, so we know that the value for high jump is going to be too low. I like this one as well. So this is how I do top-down investing. Legend Biotech. I know Kathy's going to listen, and Kathy, I was just as surprised as you are. But Legend Biotech, which makes a type of drug called a CAR-T, and they make it with for J&J, and it's the leader in its class. This one looks like it's ready to run again, taking out the 200. So there's no question that looking at these healthcare stocks, which a lot of them are drugs, but Tandem is a device, and so is Select Medical, looks strong. APLS just looks like it's setting up, and I wouldn't really go long this stock until I take out this line here. But let me just draw this line in. If they take out this line, I think that this one's going to be in play as well. So let's just put this line here. We'll be watching to see if it takes out that line. So that's healthcare. What about industrials? Scan down here. Here's big industrials. None of them made that. Let's just look for regular industrials. All right, there you go. FTAI, this one's been a super mover. Just look at the other side here. Now I was going to pass on this, and the reason I'm going to pass on this is because of the reversal here. And that looks like a shooting star. I did like this one, Copart. Why? Look at the weekly, major uptrend. Look at the daily. It's had a pullback, and now it's running again. It's not extended. Relative strength and OBV look good. Now, one thing that is not functioning for me on wealth charts is this was the earnings indicator back in November. So add 3 months. There should be earnings coming out in February. I don't see it. In fact, if you look at this, they never even put the results in. So I filed a request with support on this and then the flames because I'm not getting them either because I don't know if it's just me or if it's everybody. So sometimes I've got to look at something else. So let's just go into my trading view. So this is trading view and this is my package, CPRT. And let me show you what I'm going to look at with TradingView. So I've got a number of things to look at here. So this is Copart. So the first thing is this is Friday. You can see you've got a trend line support. You've got some resistance probably right here. And it looks like you closed above resistance. This is showing me seasonality. And we updated our seasonality indicator. So let me just take that off. And let me add seasonality back on. So those who have my package, if you're seeing things differently, you have to just take it out and put it back. So let's add seasonality back, but I don't need it 5 times. And you could see back here, seasonality is not great. And it just tells you over the next 5, 10, 15 days, minimum and maximum. Over the next 30 days, it's been up 55% of the time. So seasonality is flat there, so that's not a big helper. But what I do see here is the earnings are out. February 24 earnings are out, 33%, 29% improvement. Interesting, a negative surprise. Revenue was up 14%, a negative surprise, yet the stock traded up. That tells me that somebody was expecting the market to do poorly, and it actually beat whispers. So that's actually very interesting. The earnings are out, and you could see here on the news, earnings miss expectations increase year over year. Be interesting to see. It's you didn't see a lot of things go up despite the market missing their earnings. If you look here at their earnings, standardized reported 33 versus 34, negative surprise, revenue missed. Now, if you have TradingView, you'll get those E's. And I really love this because I can hit more CPRT and I can look at revenue expectations and you could see, well, often you could see going forward quite a long time. Here they're not giving a lot of forward guidance. Also can see earnings, and they are giving some forward guidance on earnings. So Copart looks interesting to me, and one that I might be watching in the market. A.O. Smith is another, I thought this was an industrial distributor. Uptrend, sideways move. I got to see it clear this area, but I might want to come in here with a trend line. And if it clears that trend line, I might want to be interested in A.O. Smith. The shippers are starting to look interesting. This is Genco. Now, these are probably higher because of what's going on in the Red Sea. It is extended, and that might bother me some. Might also look at Starbulk and see if it is as extended as GMK, and you could see it is. But these are also looking interesting. So what we just did is we looked at some of those key industries, healthcare and industrials, and identified a number of stocks in both of those groups. To me, I'm a top-down person. I identified the market is strong, although short term I'm a little nervous. Longer term I'm very excited. I found out where the strength in the market was, and we called out industrials and healthcare. And I went and I scanned for pullbacks and uptrends in those groups, and I came out with a handful of stocks. Now, sometimes you just can't help yourself, and you want to look at a large group. So I always share on in my YouTube videos, and this only works if you have wealth charts, my combo leaders list. And all you got to do is bring up the list to the top, and you can go through and see one at a time. Are there anything interesting? Now, COLL, we already talked about this one. And I'm curious if it had its earnings come out because that kind of looks like it did. So let's go back here. Excuse me. COLL. So February 24. Now this is more like it. It had a 15% earnings surprise, 10 the prior time. Its change was 45%. It beat a little bit on revenue. Okay. Next earnings are the 8th of May, $1.61. You can see all kinds of fundamental numbers here, including a Petrosky score at 8's pretty good for fundamentals if you're a fundamental kind of person. You could see how far above you are the various moving averages and how long it's been since you've touched. And what else do I have here? ATRs and betas. So there's a lot of information in here. And so I look here and I figure out that the earnings came out the night before, pull back to the 50, and this is something I like a lot. And I especially like it beating earnings. So just going through the list, Carvana. One of my neighbors used to be involved in a large, it's called, I won't name it because he didn't give me permission to name it, a large used car chain in Florida. And they went bankrupt long after he sold it, I think, to Japanese. And I asked him about the bubble that was occurring in the used cars. And it sounds like there's plenty of supply and not enough demand, and that's never good for an industry. But for whatever reason, Carvana continues to do extremely well. And you can see this must have been earnings date, and they must have beat their number. So let's just look at CVNA. Can't wait till this is fixed in wealth charts. It was there before, so I know it's going to come back. But let's just look at Carvana. There's the big date, and you could see, interestingly, again, another one of these where maybe it wasn't about the beat, it might have been about the projections going forward. All right, ENV InvestNet. Here's one, Evolent Health. This one had a big move on Friday, but it's a similar pattern. It's in an uptrend. Weekly Bongo green, daily Bongo switch. It's not too extended. Relative strength and OBV look good. I like that one. Hudbay Minerals. I thought this was more energy than gold. I'm going to skip that one. There's MRVI. Just looking through if there's anything. Sprouts Farmer Markets. This one probably too far extended. Let's see what the high jump is. It's at 100. But again, look for this to pull back before it moves higher. And look at the weekly. What a powerful move on Sprouts Farmers Market. Here's that Copart, which I thought was interesting, and I'm going to be looking at one of the ones for this coming week. And then Tandem, again, let's just go look at Tandem. This has really fallen off my radar because, frankly, it was not doing well for quite some time. So took out resistance there, closed above it. Earnings are out. Horrible earnings, but maybe somebody thinks all the bad news is out. I'd love to show you this thing going back. So let's just, how do I change the date? I can never remember how. I've got so many platforms. Well, this is the time that I first played Tandem. It was in April 8th. So it was right in here when I was at a meeting. As I said, $5 or $6 on the stock. And I actually did a weekend video saying that this thing looks great. And I kid you not, sometimes even a blind squirrel gets lucky. And I'm thinking, man, what a great move. It went up to 52. Took partial profits. Thank God I didn't take them all because let's see where it goes. And I did take profits along the way, but I kept a piece running. And, again, still a big gain from when we started. And there we go. $150. And then it died. It's amazing what this did. I don't see what's going on in the fundamentals. I guess revenue, um, maybe revenue is people like the revenue, but I'd do some more research. So on that note, I'm going to call it a day. Went a little bit longer than last week. I can't tell you, I never had so many positive comments about doing it in 30 minutes. No nonsense, top-down investing with a few of the extra indicators I like. Hope you have an awesome week in the market. Let's see what that PCE is, and that's a wrap.